I've lived in the East my whole life, but 3 years ago, I did something unexpected. I invested in Jurong Lake District, and crossing 2000 PSF was a big deal. But look today, Jayden has crossed 2008 PSF, and of course, people have started accepting the PSF of OCR crossing even 3000 PSF. So even if I, as an East Sider, believe in Jurong future, maybe it's time for you to look a little bit closer and let's dive in. Let's go. Whenever a new launch comes out, everyone will start asking the same questions. Martin, should I buy this project or not? Today we'll be talking about Lucerne Grand. Some people say it's expensive, some say that the MRT is too noisy. Others believe that Jurong Lake District will be the second CBD. So who's right? In this video, I'm going to break down the numbers, the opportunities, the risks, and finally, for you to consider whether you should or should not buy Lucerne Grand. By the way, if you enjoy objective property analysis backed by data, not sales pitch, consider sharing and subscribing to this channel. I'll share more markets insights to help you make better property decisions. So why everybody is talking about Lucerne Grand? Let's first understand why this project is attracting so much attention. CDL won the land price at around $1,132 PSF per plot ratio. That wasn't just a highest bid, they pay roughly 10% higher than the second developer, right? So people immediately ask, did CDL overpay? Not necessary, right? The estimated break-even sites around 2000 PSF. So most analysts expect the launch price to be around 2003 to 2007 PSF. So from developer perspective, the margins are actually quite normal. Now let's talk about prices. One of the biggest questions I've been getting is, Martin, isn't Lucerne Grand too expensive? So before I continue, I want to hear your opinion. If Lucerne Grand's launch at 2005 PSF, would you buy it? Comment yes or no below before we go into the Jurong Lake District story. Then after you have finished watching, come back and see the answer have changed. Honestly, expensive or not, that depends on what you're comparing against, because this is where many buyers make a mistake. They compare Lucerne Grand to resale condo that were 10 or even 15 years older. Of course, it will look expensive, but that might not be the right comparison. When you're buying a new launch today, you're actually choosing between other new launches available in the today market. And interestingly, I think this project naturally fall into two different categories in the OCR. So I group it into two groups. Group A, affordable regional launches, which is Tengah Garden and Nara Residence. Tengah Gardens launched at an average of about $2,170 PSF, and Nara Residence it's about $2,020 to $2,180 PSF. And for Group B, it's transformational launch. Lentor Garden, which is about 2003 PSF average. Vela Bay, 2,740 PSF. And of course, Lucerne Grand expected to be about 2003 to 2007 PSF. The first category is what I call the affordability region, Group A. This project group offer buyers a lower entry price, making them attractive for affordability and of course owner occupations. On another hand, you have what I call the transformations launches, Group B. This project generally located in areas undergo major transformations, supported by significant government investment, and of course the future infrastructure, stronger long-term growth story. Personally, I believe Lucerne Grand belong to Group B, in my opinion. Let's compare the prices. If Lucerne Grand launched at around 2003 PSF, that's almost on par with Lentor Garden. So at around 2005 PSF, you're paying roughly 9% premium over Lentor Garden, around a 15% premium over Lentor Garden, and that's about 16 to 20% premium over Nara Residences. Even if Lucerne Grand launched closer to 2007 PSF, it's very close to Vela Bay, which is already selling at about 2,700 PSF and even higher. So from perspective, of prices, Lucerne Grand isn't setting a completely new benchmark in my opinion. It's entering an existing premium new launch segment. So the real question isn't, is Lucerne Grand expensive? The better question is, does Lucerne Grand deserve to be compared with the other premium transformations project? Or should it be priced like a typical regional launches? If you believe in long-term transformations of Jurong Lake District, then this pricing start to make a lot more sense. And that's exactly what we are going to look at next. Anyway, I'm curious, do you think Lucerne Grand should be priced like Tengah, Garden and Nara? Or should it be compared with projects like Lentor Garden and Bella Bay? Let me know your thoughts in the comment below, and I'll love to hear what you see from your perspective. So the biggest objections, MRT noise. Because Lucerne Grand is just right below Lakeside MRT stations, so probably this will be the biggest objections. Martin, is beside MRT leh, won't prices be affected? Actually, look at the data. Historically, quiet units launch about 3 to 4% higher, but once project mature, buyers are willing to pay 5.5% more for pool views, 8.6% more for lake view. So what does it tell us? The MRT facing unit doesn't become a bad investment instead. The premium unit simply become even more valuable. The overall project will appreciate. This is something many buyers misunderstood. If this surprised you, please give this video a like. It tells me how much you enjoy the video. It encouraged me to produce more research-based video like this. And next, this is personally the biggest reason why I'm paying attention to. A healthy township normally have around 70% HDB, 30% private housing. But in the western region, only around 6% private housing. So meaning to say you only have about 6% of private housing, which is about 30 over condo. And think about it, there are approximately near to 200k of HDB ownership, which eventually will upgrade, but only around 12,000 public homes available. Demand is huge. Supply is really limited. And Lucerne Grand is the first new launch within walking distance to Lakeside MRT stations in around 11 years. This is something that buyers should really consider. If you have watched until this point, thank you so much. You are really looking at property differently from most of the buyers. Most buyers only look at today's price. Very few look and study for tomorrow's demand. When buying properties, we don't just buy today locations, we buy tomorrow transformations. Jurong Lake District isn't just another township. It's planned to become Singapore's second CBD. And of course, if you search into jld.gov.sg, you will see that actually URA create a sub-website for JLD transformations as well. And of course, what's coming? 100,000 of jobs will be created, 20,000 of homes, and 1.44 million square meter of business space. Jurong Regional Line, Cross Island Line, Tuas Megaports, thousands of MNC, and the question becomes, where does these people going to be staying? So if you'd like me to analyze more upcoming projects the same way, leave the project name in the comments. I'll shortlist the one I think deserve a deep dive. So for the investor, I think you should also look at the rental demand over here. Current rental yield is about 3.5 to 5%, supported by, of course, Jurong East Business Hub, Tuas Industry, NTU, Canada International School, and professionals expect. Harmonizations also make this unit around 5% smaller, and in case you didn't know, Lucerne Grand will be the first development that is harmonized in the whole Jurong Lake District. So of course, some buyers don't like to hear that you are buying into a smaller unit, but this is a harmonized project. That would mean that smaller but efficient, and usually means that lower purchase price, better rental efficiency, and of course, potentially stronger yield. By the way, if you are finding this useful, right, feel free to share this video with someone who are consider buying into Jurong. it will help them to make a more informed decisions. So now let's talk about the risks. I always believe in presenting both sides. A typical 3-bedder require a down payment of around 660k. Many HDB owner might not have enough proceeds, so not every upgrader will be able to afford it. This means future demand may increasingly come from private property owner, buyers outside of Jurong, or investor who believe in Jurong Lake District transformations. If you have stayed with me until this long, you probably realize something. Buying property isn't just about finding the cheapest project, it's about understanding where future demand is likely come from. Would I buy Lucerne Grand? My answer is, it depends. If you are buying purely because someone told you Jurong Lake District will boom, don't. But if you understand supply, transformations, limited launches, MRT connectivity, long-term holding, then Lucerne Grand definitely deserves some serious considerations. Remember, a good property isn't one that everybody likes today. A good property is one demand becomes stronger tomorrow. And if you are considering Lucerne Grand and you are not sure whether it fits into your financial situations, your property portfolio, feel free to reach out to me. I'll walk through the numbers objectively, not just whether to buy Lucerne Grands, but whether is it the right property for your end goal. If this video helped you understand better, remember to like and subscribe. Share with your friends or someone that you think that they would like to buy into Jurong. So I'll see you in my next video.